Well, hello everyone, to all of you dear ones, in this new topic where we are going to talk about price patterns before explaining consolidation patterns. I will introduce a website to you dear ones. It is actually stockcharts.com, a very valuable and useful website solely related to the topic of price patterns. You can see both reversal and towards consolidation price patterns on this website. For example, the head and shoulders pattern with the neckline that has formed here. You can see the left shoulder, right shoulder, and head in the head and shoulders pattern here. And you can view all the reversal and consolidation patterns in the chart school section and fully understand their explanations. Well, after introducing this website, let's move on to the category of technical consolidation patterns known as consolidative price patterns and introduce these patterns one by one. I previously explained in the earlier slides that reversal patterns are those where the behavior of the stock's price chart changes after the pattern is formed. However, consolidation patterns are exactly the opposite of reversal patterns. Well, in the previous videos, we became familiar with various types of reversal patterns. We reviewed 8 of the most important and powerful reversal patterns in technical analysis, and now we want to examine some of the most important consolidation patterns together and see how they perform on the stock's price chart. Well, as I mentioned before, consolidation patterns actually serve as a resting place for the stock's price chart. What does this mean, guys? It means that when a consolidation pattern is formed with all its schematic representation, or as we say, the pattern is completed, the stock's price chart does not change its direction afterward, but rather continues its previous direction with more strength. So, as you can see in this slide, we can say that consolidation patterns are essentially short-term resting points, and sometimes they can also be long-term. Depending on the type of price pattern in question, after the formation of these patterns, we see a horizontal trend and a weak revival of the trend on the chart, now essentially revitalizing that weak trend. That is, imagine the price chart of a stock has an upward trend. It is moving towards higher levels and continues to increase while the energy of the stock's price chart gradually decreases. Suddenly, with the emergence of a consolidation pattern, a pause occurs in the chart. It takes a break, refuels, and then continues its process with renewed strength. So let's draw a conclusion regarding consolidation patterns. In consolidation patterns, if the trend of the stock's price chart is upward before the pattern forms, it will also be upward after the pattern forms, and vice versa. In stock price charts, if a consolidation pattern forms and the chart has a negative trend, this negative trend Y chart will continue after the pattern forms, and the chart will continue its negative trend with greater strength. Regarding the discussion on trading volume, we previously explained to you that in reversal patterns, at the breakout point, we always see a significant volume of trades. Here, for consolidation patterns, the same conditions prevail, and again, we will actually see a significant trading volume at the formation of the breakout point, or the breakout point. Now, let's examine some of the most important consolidation patterns together. First, we will look at its schematic representation, and then I will explain prominent examples of these patterns to you, dear viewers, and then we will move on to the next patterns. The first pattern we want to discuss, or rather the first price pattern we want to talk about among the consolidation patterns, is the ascending triangle pattern. Let's take a look at the schematic representation of the ascending triangle pattern together. Well, in the ascending triangle pattern, since we have a chart here, I see an upward trend for the stock's price chart. In this part, the chart has its upward trend. So a chart with an upward or positive trend, meaning an ascending trend, continues until you see this area, such as here. Next, the stock's price chart gets trapped between two horizontal and slanted lines. Pay attention. between the two horizontal and slanted lines, these two purple lines that I have drawn. The chart's fluctuations get trapped between these two lines, and when this happens, suddenly at some point the chart finally breaks the horizontal line upwards. Notice the point where the chart breaks the horizontal line upwards. In fact, this is our breakout point, or our point of break. And from this point onwards, a series of events are going to happen to the chart. An event that happens to the stock price chart is the same target price that the relevant price pattern wants to show you, the same target price that this pattern wants to show you. Now, how do we see the target price? Look, guys, these two diagonal and horizontal lines you see resemble a triangle. This triangle has a base. Where is its base, guys? Its base is exactly here. This green line is the base of my triangle. We measure the size of the base of the triangle. Look, I'm talking about the price target. We measure from the breakout point upwards by the size of the triangle's base, and never forget that important word, at least to this extent, we will witness an increase in the stock's price chart. So at least by the size of the triangle's base, I can say that this, in fact, the stock's price chart increases after the breakout point, and if you know the ascending triangle pattern, you can easily predict this target on the stock's price chart. I also want to mention another important point to tell you that what we had in reversal patterns also applies to consolidation patterns. If you remember, we mentioned in previous slides and previous videos that the breakout point is always a point where the behavior of the stock's price chart changes before and after it. What does this mean? Look, guys, in this chart where I see sinusoidal fluctuations, this horizontal line always played the role of a series of what? It played the role of a series. Let me show you with red color. Here you can clearly observe some resistances. See the resistances that existed here, and the price chart was constantly being resisted and not allowing this line to go up. But after the breakout point, when the chart broke this line no longer acts as resistance and is now only playing the role of support. See, it has broken and gone up, now it has come down, now it doesn't let it go down, meaning here you have a support and it is acting as support for you. Therefore, the behavior of the stock price chart and the behavior of this line that you observe has changed before and after the breakout point. And here this line always exhibits supportive behavior towards the chart of the stock price. Right? Therefore, you can always see the upward trend continuing on the chart. So pay attention, guys. The breakout point is a very, very important point and the center of gravity of the stock price chart's behavior. Well, we have seen a schematic representation of this pattern together. Let's go through a few examples of the ascending triangle pattern in the real world and observe the events that occurred. Guys, I have very sweet memory of this chart. On this chart, this is the chart of the full Bahar Azadi coin. The gold, it's gold. We've come to the coin chart. It's written exactly. See the new design coin. We came to the coin analysis chart. Exactly in this area. Maybe even it's an interesting memory that I should tell you. Here, I was a master's student myself and had come to the library to study, to read, and I analyzed this chart in the library. Then I immediately went and made a purchase for myself with the savings I had. See here, the chart has its upward trend. Exactly the fluctuations of the coin chart get caught between two diagonal and horizontal lines. And this point is a very important point, where the chart, after following its trend, finally breaks the horizontal line upwards at this point. And when this break occurs, what exactly does this point become, guys? It becomes our breakout point. Therefore, in this area, we should at least the base of this triangle. I consider the base here a certain amount. We should see the chart grow at least by the size of the base of this triangle from the breakout point, at least at the very least. Pay close attention to it, see how much more it has increased. And interestingly, now maybe a little, it might not be seen clearly in the video, but the coin has grown up to here. No, exactly up to here. And you can see its points here, showing what a significant growth we witnessed for our coin chart. Therefore, if you had seen this triangle pattern that day and actually made this analysis at this point, you could have taken action to buy the coin and captured this attractive and interesting fluctuation from the gold coin chart. Let's move on to see the next example together. Well, here's the chart of Beran Oil Company. Shea Beran has taken on an upward trend. This upward trend has continued to the point where the chart gets trapped between two diagonal and horizontal lines. Note that the horizontal line is always at the top and the diagonal line is always at the bottom. This means we cannot actually consider this shape as a chart pattern, specifically an ascending triangle price pattern. Look, we don't have such a thing, guys. The horizontal line is always at the top and the diagonal line is at the bottom. Well, here, the price chart is stuck, but ultimately at this point, which is our breakout point, the chart, in fact, can be said to have broken the upward horizontal line and started to rise. Well, look, the fluctuations I see here have always been resisting this line and not allowing the chart to go up. With this breakout, see how much the chart got stuck here. Guys, in this area, see how many times the chart has tried to return but couldn't several times. If this chart is zoomed in, it becomes larger. You see many points where on that day, the market wanted the stock to drop, but it didn't, and instead continued to grow. It goes up to the point where an explosion occurs, and we see that significant growth of the chart in this section. All right, let's look at the next example together. The chart you see is actually the Kegel chart. Kegel has come up in an upward trend. From a certain point onward, the chart is trapped in a diagonal and horizontal line. There's also a point I need to mention to you, dear viewers. You might wonder how many times the price chart of the stock should touch the two horizontal and diagonal lines for us to actually consider it as contact on two lines. Approximately 3 to 5 touches, meaning Q. If we see at least 3 to 5 touches on the chart, we can say that the chart has entered a triangular trend, and these fluctuations that have occurred in the chart will eventually lead to what we call a very, very important breakout point. Here, our trend will be an upward trend. Then you will see that by the size of the base of this triangle, we have witnessed at least some growth, and now another decline has occurred in the chart, showing its target. All right, let's look at the next example together, if we have an example. If not, we will move on to, we have another example. This is the chart of the company Shazam, which produces herbicides, an upward trend in the chart. The chart encounters various areas. I see an encounter in this area, an encounter in this area, an encounter in this area. You see, I observe encounters in different areas. And finally, my breakout point, which is a very important point, has occurred in this area. And after that, we should witness at least this much growth in the chart. You see, this increase has happened much more on the stock's price chart, and this ascending triangle pattern has shown its target powerfully. Well, we have learned the first consolidation pattern of technical analysis together. Let's move on to the second technical analysis pattern from the series of consolidation patterns, which is the descending triangle pattern. Let's move on and look at the schematic representation of the descending triangle pattern together. In the descending triangle pattern, as you can see, the difference compared to the ascending triangle pattern is that the price chart trend of the stock before the formation of the pattern is a downward trend. We have a downward trend. This red line you see is the trend line, which we will discuss in the next technical analysis after the patterns. It's a very important analysis. Here we have a downward trend. We reached a point where, from a certain point onward, the chart gets trapped between two sloping and horizontal lines. A purple horizontal line that I have drawn here, and this red sloping line that is drawn here. Note that another difference between the descending triangle and the ascending triangle is the presence of a horizontal line below and a sloping line above. I previously mentioned that in the ascending triangle pattern, the lines are like this, but in the descending triangle, the lines are like this. That is, your horizontal line is placed at the bottom. The sloping line is at the top. So where's our breakout point, guys? The breakout point is exactly where the chart finally breaks the horizontal line downward. Note, what is the similarity between the ascending and descending triangles? Their similarity is that in both patterns, the chart always breaks and cuts through the horizontal line. It has nothing to do with the sloping line. So this is my breakout point, and now I want to see the price target for this pattern as well. For the price target of this pattern, similar to the ascending triangle, it is at least the width of the base of the triangle present here. From this point, boom, we are witnessing a drop in the stock's price chart. From this point, I don't mean exactly this point, guys. Take a look. When we say from the breakout point, I mean any area in this section. Any area in this section. Because right now in this section, it is showing a price here. Here it's the same price, there's no difference. In this area, it becomes a specific price. From this area downward, we will witness a drop in the stock's price chart by at least this much. All right, let's go and actually see an example of a descending triangle together on the stock's price chart. In this segment, the chart we want to see, I observe two price patterns within the chart. A very important point is that price patterns may continuously appear on the stock price chart. So you might see several types of price patterns on a stock price chart, or even see the same price pattern repeatedly and continuously. There's nothing wrong with that. The important point is that each price pattern you see will give you its own target. Well, here is the chart of the stock, and Petro experienced an upward trend followed by a heavy decline. In this heavy decline, I'm seeing the chart exactly between two horizontal and diagonal lines. These two lines intersect at different areas of the chart, creating the minimum number of contact points. So I should wait for the point where the chart finally breaks my horizontal line downward, which actually serves as an exit point and an exit signal, or in other words, a point where I know the chart is going to decline from that area onward. The target is at least the size of the base of my triangle, where I will witness the chart's decline. Well, now let's move forward. As we move forward, we notice that the chart is still getting stuck and trapped between two horizontal and slanted lines, and it hits certain points. But from a certain point onward, we can actually say that our breakout occurs. Or we can say that at this point it is different. Exactly at this point. The price chart of the stock breaks this line downward, and we should see a drop in the chart at least equal to the base of the triangle. This is exactly what has happened on the stock and Petro chart. Well, let's look at another example together. The chart you are observing is the chart of the Oil Industry Investment Company. With the symbol V and oil, there is an upward trend, a decline, and then the declining trend of the chart gets exactly stuck between different lines. One line can actually be said to be completely horizontal, and a slanted line gets stuck in these areas. And after that, from a certain area onward, the main point we are looking for emerges. The breakout point that exists here, and after that we should witness a decline in the chart at least equal to the base of this triangle, which is also quite evident. Well, let's see if we have another example. Yes, we have another example here as well. You can see the price chart of Sam Boynord Cement, which shows a downward trend. and then the chart gets caught in a descending triangle, I will draw it to the size of the triangle's base so you can see it more easily. Here it corresponds to the size of these contact points. And finally, the point where the chart has ultimately broken through and our breakout has appeared. I mentioned a point in previous videos that when we see the chart discontinuous from a certain area onwards, it's due to the lack of trading of the stock in that market and on those different days. I won't explain much about it now because I want to later discuss it in detail and tell you about the interesting methods for analyzing these chart segments. Let's move on to the next slide.